In San Francisco, and this is Bloomberg Technology. Coming up in the next hour as we close the chapter on earnings, some big tech names are hovering at record highs. Can the bullish sentiment hold, or will global headwinds change the tide? Plus, Tesla's wild week. CEO Elon Musk shocked investors with his plan to take the company private, but we're still missing answers to some key questions. And space's next frontier, how NASA is launching a spacecraft that will attempt to touch the sun. We're going to speak to an engineer on this mission. But first, to our top story. After an earnings season with lots of surprises, positive and negative, we are looking ahead to the outlook for the tech sector for the rest of the year. Despite some challenging headlines and worries about regulation, tech is once again leading the gains in the overall market. So what are the standouts and where are the possible headwinds? For more, I want to bring in Dan Ives, Chief Strategy Officer and Head of Tech Research at GBH Insights, as well as Bloomberg's very own Caroline Hyde for us in London. Dan, I will start with you. What are you looking ahead to? Challenges and upsides?
I mean, look, there's definitely challenges in terms of some of the macro or geopolitical issues we're seeing. But in our opinion, you're really seeing strength on the enterprise side in terms of spending, especially areas like cloud, cybersecurity that have been robust and we continue to think are going to be robust with M&A on the horizon. And I think on the consumer names, obviously Apple, it's been a groundbreaking week or two. But I think fundamentally there's a separation, a fork in the road between some of the strong fundamental trends on the enterprise and the consumer side versus some of the headwinds that we've seen across some of the social media names.
Caroline, we've seen a broader sell-off today, largely due to the risks in Turkey, but some parts of the tech sector actually underperformed even that. Explain.
Yeah, really in the doldrums, the likes of the chip makers. Now, this was actually coming floating. The news, the bad news for chips came from your side of the Atlantic. Over in the US, we saw microchips have a particularly bad set of numbers in terms of their forecasts, but notably, it was on the back of the trade tension concerns they were floating. This was about warnings that China was really reducing its orders. We've got, therefore, the trade ramping up in consideration. We saw, therefore, microchips fall about the most since the year 2000. It's down about 14%, but that really knocked over here in Europe. You saw ST Micro, you saw Infineon down. In fact, chip makers were off by about 2.4%, much more than a percentage point worse than the overall Stock 600 benchmark. And we saw in the US them underperform because there was actually a note out from Goldman Sachs that took many by surprise, saying, look, Intel, we're cutting to an underperform, cutting the price target. They're worried about the competitive pressures for Intel. They're worried about supporting of their margins. And so that was equally another headwind for the chip makers in particular. So I think you saw notably chip makers and also telecoms really start to underperform the market, even in the face of the geopolitical tensions that were drilling down on the rest of the market when it came to the banks, when it came to the auto sector, particularly here in Europe.
And Dan, the story of these chip makers is often tied into the story of Apple. We saw Apple break that $1 trillion mark and now sort of retesting that line. What do you think is the longer term story for Apple in particular through the rest of the year?
Sure. I mean, it's really about the trifecta product cycle on the iPhone side. I mean, if you look at the super cycle, what we saw a year ago, obviously disappointing. Now, we believe there's about 350 million iPhones that are in that window of an upgrade opportunity. Can they get 230 million of that? That's the key. But China's at the epicenter there in terms of that demand trend, and that's something on the street's keeping an eye on. But it all really comes down to, from a linchpin, the software services piece. In our opinion, that continues to be a core of our bull thesis. We net valuation just of that business alone is 350 to 400 billion. Software services is the key on the growth side. Near term, the trifecta iPhone cycle, very focus of the street right now.
And I've got a chart here in my GTV library, Caroline, showing the others coming behind Apple, Amazon, Alphabet, Microsoft, all pushing towards that $1 trillion mark. And despite the fact that we are in the midst of summer, how does this play out?
Yeah, I think Apple probably is expected to test it once again. We're getting so close to that $1 trillion mark all over in the end of trading for this week, despite, as you say, lackluster trading, lackluster volumes. We've still got some earnings to keeping an eye out. We'll see how Tencent in China performs and the like of Nvidia. But I think what we've got to keep an eye on is just how important these tech companies are. Notably, the outperformance from Apple, which, get this, over the last 6 months, since we came off of the lows of the S&P 500 in February, since that rally, Apple alone has contributed 12% to the rally that we've seen over the last 6 months. It's borne all of that. Microsoft not far behind. I mean, they were contributing just about 8% of the rally. Amazon really outperforming as well. These companies are so important because of their huge market caps, their huge importance to the rest of the market. And I think when you look at the fan mag, as they're called now, so you've got not only the Facebook, Alphabet, Netflix, and overall as well as the Amazons and those sorts of companies, you are seeing in particular Microsoft and Apple really contributing to the overall importance of this sector and the overall heavy lifting, and Amazon in particular. I think the standouts have got to be Apple, Microsoft, Amazon in terms of the rally over the last 6 months.
And Dan, I do want to ask you about Amazon, of course, hitting another all-time high this weekend. On the flip side, Facebook, still sort of reeling after that $100 billion was wiped off its market cap. How do you expect those two stories to play out?
Well, I think, you hit on Microsoft and look at everything happening on the cloud. I mean, that's really been Nadella's golden touch. And you're seeing on the AWS side as well, there's just a massive secular shift that's going on. And that's really been a tailwind for Amazon on the AWS side, as well as just given the 100 million plus Prime members on the consumer side. Look, when you look at Facebook, you look at social media in light of privacy, GDPR, post-Cambridge, this is a pivotal fork in the road period for these social media names. And I think what you're seeing is rotation in tech as a lot of investors are looking at some of the enterprise plays in cybersecurity, cloud, big data, with some of the trends that look robust going into year end and early 19 versus social media. Definitely a lot of headwinds and black clouds on the horizon.
Black clouds, we never want to see those. Dan Ives, GBH Insights, but we will be watching, and Bloomberg's Caroline Hyde in London. Thank you both. Shares of Dropbox fell dramatically Friday after the company said its COO, Dennis Woodside, is stepping down in September, overshadowing second quarter sales and earnings that topped analyst estimates. A 4-year vet of the company, Woodside was instrumental in Dropbox's IPO in March. The company said it will promote 2 current vice presidents to report to CEO Drew Houston, but won't look for a new COO. Coming up, fake news, conspiracy theories, hate speech. Social media is rife with all three. How to fight back. And what role do journalists play next? And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Microsoft is the latest tech company taking a stand against hate speech, threatening to suspend web hosting services to social media platform Gab over anti-Semitic posts. On Thursday, Microsoft's cloud division, known as Azure, gave Gab 2 days to take the content down before it takes action. Gab was founded in 2016 as an alternative to Twitter and has attracted several high-profile conservatives and alt-right users to the site. This comes after conspiracy theorist Alex Jones and his InfoWars program were banned from Facebook and YouTube. Twitter, however, continues to host Jones's content. Now, the actions or lack thereof taken by tech platforms regarding Alex Jones continue to highlight social media's struggle to deal with fake news, conspiracy theories, and hate speech. And it comes at a time when more and more Americans are using these platforms as news sources. Since 2016, Twitter, YouTube, and Snapchat have all seen double-digit growth in users who get their news from social media. That's according to Pew Research. Interestingly, Facebook only saw a 2% growth in that same time frame. This is something confirmed by President Trump's campaign manager for 2020, Brad Parscale, when we spoke to him last month.
If you're watching Facebook for 4 hours this year, but next year you're watching 3 hours of Facebook, but 1 hour of YouTube, that changes. So we're going to monitor where eyes are going. I think YouTube continues and Google continues to work on that platform and make improvements. I think what Google's done to the search algorithm also to put YouTube results at the top, they continue to put a lot of focus and they understand the value of that platform. So we're watching it closely. We're using it for a lot of things now. We're using it probably more now than we even were in 2016.
Let's go now to D.C. to discuss where David Shavrin, president and CEO of the News Media Alliance, is standing by. So, David, these platforms have struggled with all of these things for years and years and years and years. Are we just stuck with them this way? Or can they actually be cleaned up?
Well, in some respects, it's way overdue. I mean, Alex Jones has been spewing this garbage for years. So why now? Why this week? And I think a big part of it is the platforms are finally, and I think appropriately, losing the argument that they're neutral. I mean, for a long time, they maintained that they don't take positions, they're neutral, when the platforms really are the opposite of that. They make billions of decisions about what content you and I see and how the content I see may be different than the content you see. And I think people are holding them responsible for that. And this is part of a long-term movement for them to be held more responsible for what shows up on their sites. And I think it's a good thing, ultimately.
That said, we do have to confront the idea that, it is a big deal when a technology platform can decide who stays and who goes. Are there better solutions than just banning Alex Jones?
Sure. But again, let's start with the understanding that they're not neutral platforms. They're the opposite of that. They make lots of decisions about what we all see every day. So we have to start with that frame. Moving from there, they're wrestling with these issues about fake news and bad content. I represent 2,000 news publishers, and as I always say, if you have a fake news problem, you know what? We're in the real news business. So why can't we work more closely together? A number of the platforms, Facebook in particular, has really marginalized news publishers and push them away at a time when they really should be embracing what we do, highlight actual real news content, and let's work together to deliver more actual credible quality journalism to people. And they seem to have a really hard time getting their mind around that. And part of it is their engineering perspective. Part of it is really not understanding how this issue is evolving in ways that don't really work for them over the long term.
Now, companies like Facebook and Twitter have refrained from hiring journalists, and at the same time, in the midst of this Alex Jones controversy, Twitter CEO Jack Dorsey suggested that it was journalists' job to clean up the platform and decide what is right and what is wrong, what is truth and what is not. He has since retracted that statement. In a way, he said his original suggestion around journalists was ham-fisted and wrong. We need to openly discuss and help design protocols to make decentralized policy and enforcement possible. Should these companies be hiring journalists? Would a more interventionist approach, like Facebook jumping in and saying a Holocaust deniers page is actually, not real news or not supported by the company, would that be more effective?
Yeah, first of all, the Jack Dorsey thing, I mean, he correctly notes what journalists do. They check facts and they run down leads. He seemed to have wanted them to do it for him for free, which was an odd suggestion. But more broadly, they don't need to hire journalists. What they need to do, that's what we do. That's what my members do. We hire journalists and we have editors and we have a long history of doing that credibly. How about highlighting our content? How about having a way for us to make a sustainable financial deal to where, moving forward, journalism can thrive on the platforms rather than being completely marginalized? They don't need to do it. We do that. But at the same time, they love to stiff-arm the news business when we should be working together. I mean, we should be an answer for them rather than a problem for them.
I spoke to Ellen Pao yesterday, the CEO of Project Include, who very much disagrees with the decision that Twitter has made here. And she talked about whether or not we're hitting a social media peak. Take a listen.
I think people are now realizing, this is not where I want my kids all day long. This is not where I want to spend my own time. So how do I manage that? And as people get smarter and they realize that this is not the best place for having a conversation, for learning new ideas. There's so much fake information out there. Like, there is hopefully going to be another source where people are going to get information and have better conversations.
That said, David, are you optimistic that there could be another source at this point, given the critical mass that Facebook has?
Yeah, I mean, take Facebook as a perfect example. They talk all the time about community and meaningful social interaction, MSI. What we all know, though, is that when you have social interaction, some of it's good and some of it's not good. And they can't just take credit for the good stuff and not take blame for the bad stuff. It all comes there. And what they do have that's positive is this incredible connected platform where it could be an incredibly vibrant way for people to get great news and information about their communities, information that people desperately want and need. What they need is to focus on quality. Who produces good quality news content? How can we highlight them? How can we provide a financial way for them to succeed on the platform? And by the way, that helps us too, because we're delivering high quality journalism and content to people. Also at the end of the day, you can't solve all the problems. What they need to do is have a higher percentage of good content, and that effectively suppresses the amount of bad content on the platform.
Interesting. All right, one solution there. David Chavrin, CEO of the News Media Alliance, thank you so much for joining us today from Washington. Coming up, how are big tech companies finding the next Mark Zuckerberg or the next Steve Jobs? Well, one experimental fund says it's the playing field that's unfair. We'll take a look at what they are doing to find the next generation of creators. This is Bloomberg. While big tech is known for some of the best and brightest, the industry may be limiting its own talent pool. In fact, it definitely is. Disparities in socioeconomic status, race, and gender are producing what one study called lost Einsteins, talent that goes unnoticed because of lack of equal opportunity. In tech, names like Zuckerberg, Bezos, Musk all got their start in the Ivy League. They're also all white and male. Now, an experimental fund called Pioneer is looking to address the opportunity gap. The group is hoping to be a sort of search engine for talent, putting more science into discovery with a more global search. Here to tell us more, Pioneer's founder, Daniel Gross. At 27, Gross is a former partner at the incubator YCombinator, whose fledgling predictive search company Q was bought by Apple back in 2013. Daniel, thank you so much for joining us. So, how exactly do you plan to be a search engine for talent without having any bias at all?
Well, thank you so much for having me on, Emily. So Pioneer is a project, as you mentioned, aimed at finding the millions of kind of lost Einsteins around the world. We kind of believe that for every Elon Musk, Marie Curie, or Albert Einstein, there are millions more that don't achieve or reach their full potential. So we're trying to use the kind of power of software and the internet to find these people at scale.
How?
Well, unlike traditional grant programs, where you got a very small set of people reviewing thousands of applications, what happens with Pioneer is prospective applicants compete in what we call the Pioneer Tournament, which is a 30-day event, takes place over a month. And instead of just submitting one application, you submit and demonstrate progress over the course of 30 days. And instead of having 5 or 6 people review all of your work that may have biases, we have the community. The other prospective applicants vote on whether they find your work interesting or ambitious. And we think that the power of crowdsourcing has a tremendous role to play in being able to highlight people from kind of unrepresented or more diverse backgrounds.
So you're not just looking for entrepreneurs, right? This is across many, many fields.
That's right. We're looking for people that seem interested, curious about the world, and have a project they're working on. A project could be anything. It could be a company you want to start, but it could also be work in fundamental physics that you want to do, or art that you want to create, or music that you want to do. Because we think that there's a lot of people out there in the world that are kind of self-editing themselves out of success. They're not even sure that they can reach their full, potential. When I think of one of the main benefits I got out of Y Combinator, it wasn't really the investment as much as someone telling me that I should take that idea that I had a little bit more seriously.
And by the way, you applied to YC from Jerusalem while you were attending a military prep camp. And how old were you?
I was 18 when I applied, the youngest person to apply at the time. And so what I want to try to do is I want to find people that will be significantly more successful than I was.
How do you find those people?
Well, we're doing a bunch of things in order to try to reach them. First, as I mentioned, our application process is, I think, unlike anything else that's ever been done. No one's really tried to use software to find these people. Second is we're trying to get the word out using kind of the same growth hacking techniques that Silicon Valley has used to get their product out there to different markets in the world. Looking for people that are trying to get visas into various countries. Looking for people that are doing research in various domains and targeting them and trying to reach them. Thirdly, we've recruited a whole network of a diverse set of experts in different domains, industry experts from different categories, ages, backgrounds, and hopefully those folks will serve as an inspiration to people looking to apply.
Some of the people backing this include Mark Andreessen, the folks at Stripe, CEO Patrick Collison. I guess my question is, let's take gender as one example, which I'm very concerned about. How do you make sure that the people who are voting, the people who are part of this more collaborative process, don't bring their own biases into the process itself? Because words like genius, words like visionary, we use those words to describe men. We don't often use those words to describe women, using gender as just one example.
Yeah, we actually don't use the word genius anywhere on our site. We use these words of creative outsiders, ambitious outsiders. And we spend a lot of time thinking about this, making sure that we don't frame the site in a way that would be pejorative or negative to anyone. I remember myself when I was applying to YCombinator, I came to the site many times and kind of thought to myself that it must have not been for me. And so we're very sensitive to the fact that the main barrier we're working against is people's own self-editing. And so we're very cognizant of kind of reducing the almost activation energy required to get a submission in.
Now, it's very important. You were actually on the show many years ago for your original company, which was a search engine for the iPhone, right?
That's right.
And then you got bought by Apple, and now this is a search engine for talent. What have you learned in that whole process through, working at Apple that you want to bring to this?
Well, the largest observation I made in the entire journey that I had, coming out from practically nowhere in Israel to Silicon Valley, raising a Series A and B from Sequoia, selling the company to Apple at 23, running a large set of machine learning teams at Apple, there's one thing that I kept on noticing over and over, which was the role that luck played in my success. And what we're trying to do with Pioneer is remove the amount of luck you need in order to be successful. The fact that, I had a serendipitous encounter with someone who took a bet on me is something that we're trying to systematize. And so the goal is for Pioneer to kind of skew the odds in favor of talent, potential, and ambition, not luck or where you came from.
All right. Daniel Gross, founder of Pioneer. We'll be tracking you guys and girls, gals, whatever. Really appreciate this. Thanks for stopping by.
Thank you so much for the time today.
All right, still ahead, Tesla's wild week. More on the twists and turns that followed Elon Musk's bold tweet and the issues that may await the electric car maker. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Tesla CEO Elon Musk and advisors are exploring a wide pool of investors to back taking the car maker private. Bloomberg is reporting that this is to avoid concentrating ownership among a few new large holders. Tesla is holding early discussions with banks about the feasibility and structures of a possible deal. They're apparently canvassing investors, including large asset managers. All week, Bloomberg has talked to Tesla analysts for a reaction to Musk's potential moves here. Take a listen to what a few of them had to say.
One, it doesn't economically make sense for him, and two, in the stage that the company is in, it doesn't make sense because he's in a growth stage. He's not in a mature stage. Companies go private that are usually in a mature stage and they are generating significant cash, but the shares usually are not getting a valuation that shows the value of their cash generation. He needs the public markets for financing. I mean, it would be easier to raise financing in both equity and debt for him if he's a public company.
No, this doesn't change my perception or outlook, and it hasn't changed my outlook on my short position. In fact, we were in shorting more shares today on the strength in the stock.
That would certainly help the management. It would also, remove the stock from the scrutiny of the financial markets as they go through a difficult period. They may get profitable near term, but they probably don't generate enough resources and cash, in particular, to actually fund the growth for the next phase of the business. So it would make a lot of sense to be private. At this stage, we can only take whatever was said so far with a bit of a grain of salt because it's not part of an official announcement.
Come now, this is not going to happen. I think this is just a game to make sure that to put the fear of God into the shorts once again, which clearly he did. But do I think that this is going to come to fruition? I doubt it. I don't think this is going to happen at all. But it's Elon Musk, and if you've bet against him, it's been a very bad bet.
Indeed. For more, I want to get to Bloomberg Business Week's Max Chafkin. Also with us in New York, we've got Liam Denning of Bloomberg Opinion. Max, there's also reporting from CNBC that the board is likely to tell Musk to recuse himself from some of these discussions. What do you think this tells us about the relationship between Musk and the board at this point?
I mean, this is what you'd expect, if there's a buyout. Normally, if the CEO is buying the company, he's got to recuse himself. It's just this stuff normally happens, way before you would announce it. And I mean, the board coming out and saying, oh, well, we kind of talked about it a week before, that's not very much time at all. I mean, if you go back and read, Dell, the proxy, for the Dell buyout, I mean, that was going on for months and months and months. So, I mean, this is sort of proceeding along, which, kind of suggests, okay, maybe it's real. Those people who said it's possibly a joke or some kind of a ruse, the longer it goes on, the more you think, well, maybe there's really an offer here.
Liam, there are still a lot of questions that we don't have answers to, which we've been trying to get answers to over the last 3 or 4 days. One is where is the money? Who are these funders? Do we have any more clues other than the fact that our reporting says it's not SoftBank?
Right. I don't think we really do have any clues because this can't be, a lot of people are refer to it as a leveraged buyout. It can't be a leveraged buyout. You can't put a slug of debt on a company like this, which is consuming cash as it grows and which is already heavily indebted and unprofitable. It would have to be super patient capital. I mean, public markets have been very patient with Tesla over the years, very accommodating to dilution, missed targets, a lack of profits. Frankly, I don't know who would write a check that large and be willing to take on this risk.
Max, is there a clue in that we don't have clues? Does that lead us to any conclusions?
So as Liam says, like the usual suspects, investment banks were sort of out of the question from the beginning. So it's not that surprising that they didn't know. I think I mean, it is surprising, but in this kind of unreality that we live in, it's not that surprising. So I think the ones we should be looking at are Silicon Valley, in terms of sort of startup investors, the people who are invested in these mega unicorns like Uber and Airbnb. If you squint, you might see Tesla looking a little bit like Uber, and the other are the big tech giants. Apple and Google and Amazon all have interest to some extent or another in cars. Google has a big, car company thing called Waymo, but Apple doesn't. So I think that would be, one possible angle where there's either an equity investment or an outright acquisition from a big technology company, and we know from reporting that those have been talked about over the years. So it wouldn't be totally surprising or totally out of character.
Now, Liam, you have a great piece out that is a good reminder of, as you put it, how far Tesla and Elon Musk have veered from his master plan of 2006. Remind us what that plan was.
Well, it was a fairly standard plan for a new consumer product. Essentially, you build a very expensive first product that first adopters buy, and then you take that revenue and plow it into a cheaper version, and so on and so forth. And actually, that kind of made sense. Now, the problem is it's very hard to finance a car company like that because these businesses are famously capital intensive. And at the beginning, Tesla went public in 2010 to raise more money. Again, a fairly standard thing. But certainly from about 2013 onwards, which is when we saw that first big uptick in the Tesla market cap, the company's ambitions just began to metastasize. That's when we see them start developing the Model X, the $5 billion gigafactory, and it's really just gone on from there. And I think where we are now is this is a company with a very high stock price, which has been underpinning its finances for a while, and it's really had to kind of expand its ambitions to fill that stock price. The problem is what's been happening with the Model 3 and the setbacks there has really started to test people's faith in the vision of the company.
Well, I can think of some other capital-intensive businesses, and one of them is space. Max, is it realistic to think that, as Elon proposes, the same model that he's using at SpaceX, which is still a private company where employees can still access and have liquidity events when they want to, that could be applied to Tesla?
I think it makes sense, in Elon Musk's mind, because he runs SpaceX. Things are going, they're at least a lot more stable than they are at Tesla. And so you could sort of see why maybe applying a similar structure to Tesla would make sense. And again, SpaceX's structure is kind of similar to Uber and some other large, privately held venture-backed companies. The problem is that the rocket business is a lot different from the car business. And, SpaceX has a lot of revenue. Each one of these launches costs $62 million. So there's a lot of money coming in. And the other thing is, once you sort of, open the gates and let people in, which Tesla did, it's gonna, there are all sorts of complications in terms of closing them up again. I mean, one obvious one is that Tesla employs a lot of people. These employees are not going to be thrilled to have their, liquidity taken away, to not be able to have as much freedom to sell their shares. Also, if you have a business with a lot of capital needs, being public is really good. That's kind of what you'd want to do, because it makes it cheaper and easier to raise money.
Unless, apparently, you're Elon Musk. Okay, Bloomberg's Max Chafkin and Liam Denning, thank you. Of course, we'll continue to follow. I'm sure there will be much, much more to chew on next week. Sticking with Tesla, after about 5 years at the company, engineer Doug Field is heading back to Apple. The hire is a big one for the tech giant. Field will likely join the Apple car unit known as Project Titan. Apple kicked off an ambitious effort to develop a self-driving car around 2015 to take on Tesla and Detroit, though, as Max mentioned, they're far behind. After opening up new offices, car engineering machine shops, and hiring thousands of engineers, Apple shifted away from building a car to focus on underlying self-driving technology. Well, consumer DNA tests have taken off in popularity, promising to give you clues to your heritage and health. But after the test is done, who owns your personal genetic data? Bloomberg Quick Take explains why you should think twice before sending in that vial.
Personal data doesn't get much more personal than this. That's your DNA. Consumer testing companies promise that in exchange for a vial of spit and a fee, they'll reveal your heritage and clues to your health. Called direct-to-consumer genetic testing, the industry has grown in popularity. Sales are projected to triple in the next 5 years. But watch out. After the test is done, those companies still have your genetic data, and there are few limits to what they can do with it.
If you read the privacy and the terms of use policies for any of these genetic testing companies, they actually outline for you very clearly all the reasons you might want to really think hard before you participate in them. Recently, 23andMe struck a deal with GlaxoSmithKline to provide them data to develop drugs. That is a huge part of the business.
These agreements, which consumers must sign, also say the companies may have to share data with law enforcement if compelled by a court order. They haven't yet complied with any requests, but they may not need to.
Authorities say this is the face of the Golden State Killer.
Police in Sacramento County, California, believe they cracked the long cold case of the Golden State Killer by matching DNA from a crime scene to one of his relatives through an open-source genealogy website. In 2008, Congress passed GINA, or the Genetic Information Non-Discrimination Act, which is meant to bar employers and health insurers from using people's genetic information against them.
There are some loopholes in that law. For example, life insurers could use your genetic information to decide whether to offer you a policy or not.
But at least the products do what they advertise, right? Well, yes and no.
One thing that they can definitely 100% tell you is other people that you're closely related to. But after that, you get declining accuracy with basically every other application.
For example, breast cancer.
What if you get a test result back that says you're negative for one kind of breast cancer, but maybe you are at risk for other kinds of breast cancers, right? Because there's thousands of markers for these conditions, and they're not all well understood.
Some consumer DNA companies also claim to be able to give you further health insights.
The science is just not there in those realms to effectively say how you should be exercising or eating, or what skincare products you should be using based on your DNA.
Even if you decide a DNA test isn't for you, you might want to convince your relatives as well. Their DNA could inadvertently reveal a lot about you too. So remember, before spitting into that tube, it's not just personal, it's familial.
Coming up, for the first time in history, humanity is setting out on a mission to a star. We'll discuss NASA's upcoming launch to the sun next. This is Bloomberg. For the first time ever, we are going on a mission to a star. NASA's Parker Solar Probe sets out to travel closer to the sun than any spacecraft before Saturday. And if all goes well, it just might change the way we look at our solar system. The Parker Solar Probe is slated to launch August 11th on board a Delta IV Heavy with upper stage rocket, lifting off from NASA's Kennedy Space Center in Florida. Joining us to discuss, Betsy Congdon, lead engineer on the heat shield for NASA's Parker Solar Probe. So Betsy, explain to us why this is so groundbreaking and what you're actually hoping to learn from this mission.
This is such a groundbreaking mission because we've never been this close. To kind of put it in perspective, if the Earth and the sun were on a football field, we're getting within the 5-yard line close to the sun. So we're getting really close. And there's a lot about the sun that we don't understand, even though it's such an important part of our solar system and it's our star. It sounds a little technical, but we don't understand how the solar wind is accelerated, which is a really important feature of the sun and affects our life here on Earth. We also don't understand why the corona is hotter than the surface of the sun. The corona is that hazy region that we all saw when we looked up at the eclipse last year, and it's hotter than the surface of the sun, which doesn't make a lot of sense. So we're actually going to go into that region and study the waves and the particles and the fields to understand what's going on at the sun.
Now, you were instrumental in developing the heat shield that will actually make this all possible. Talk to us about the technology that you've been working on for, as I understand it, 9 years to make this happen.
Yeah, I have been working with a team of people for the last 10 years working on developing the heat shield. The heat shield itself is about 4.5 inches thick and about 8 feet in diameter, but it only weighs about 160 pounds. So we like to call it our 8-foot Frisbee. It's a really low, lightweight composite form of carbon-carbon and carbon foam. The front side, when we get close to the sun, will actually be at 2,500 degrees Fahrenheit. But the spacecraft during that time will only be at 85 degrees Fahrenheit. So we're keeping everything cool behind our shadow.
So talk to us about the timeline here. When do you arrive? When do you return?
So the spacecraft will be launching tomorrow, and then we will go through our first pass of the sun, actually in November. We go through 24 passes in the next 7 years and get closer and closer to the sun using Venus to actually, as a gravity assist, to get closer and closer to the sun. So it's a 7-year mission. And as we get closer and closer, we're going to learn more and more. But that first pass that's happening in November, we actually expect to get data back shortly thereafter, and we'll start learning new things about the sun right away.
So, I'm curious, once we get this information, how will that change our lives? How does this information arm us with potential new possibilities?
So space weather is a really important phenomenon, and how it actually can affect our satellites that are going around the Earth itself. It affects their operation occasionally, and so understanding why solar storms happen and what happens is actually really important to our life here on Earth. Additionally, as we start exploring other regions and sending astronauts out farther and farther, they can be affected by these storms. And so understanding why they happen and what happens and how the sun actually is interacting with us is actually vital to us understanding how to actually interact with our star. And we hope to also understand more about other stars by exploring our own.
I gotta ask you, space has become such a controversial new frontier. You've got the Trump administration now proposing a space force. Is that something that you know, given all of your work in space, think is necessary to invest in?
I don't have anything to say about that.
Well, what are you most excited to learn then on this particular mission? You know, when you get that data back, what are you going to be pouring through for that first piece of new information?
So there have been hundreds of thousands of people who have made this mission possible, and just being part of that team has been so special. And I'm really looking forward to I know that we will be rewriting the textbooks about the sun, and we'll be learning completely new things that nobody could have ever imagined. And to be a small part of that is just so amazing.
Betsy Congdon, NASA Parker Solar Probe engineer, thank you so much for joining us. Coming up, big screen, big problems. MoviePass, the subscription service for moviegoers, is changing its program as it loses customers. We're going to hear from CEO Mitch Lowe about his turnaround plans next. This is Bloomberg. A service that was too good to be true for customers and an easy target to bet against for investors. But more than 3 million people signed up, and even as many questioned whether the company could survive with that business model. CEO Mitch Lowe of MoviePass joined Bloomberg Wednesday to talk about the company's new subscription plan and how this will lead the business towards profitability.
Over the last year and 3 million subscribers, more than 3 million, not more than 2, we've been able to watch the segmentation of our subscribers by the amount of movies they go to. 15% of our subscribers cost us 40% of our cost of goods. By capping it at 3, not only do we give if we had come out and said, we're going to give you $45 worth of movies for $9.95, you'd be saying, what a great deal. The only difference today is it's going from a movie a day to 3. 85% of our subscribers see less than 3 a month, and the average is coming down close to 1 a month, which is why this business model is sustainable. It gets us very quickly to 1 movie a month. The average cost in the United States is $10 a movie. We bring in 10, and then we make our money through advertising, studio partnerships, this concept called a night at the movies, where we generate income from, you're going to dinner, you need babysitting, et cetera.
In addition to sort of the questions about the sustainability, there's the service itself, right? People love talking about this company, I have to say, when we bring it up. Yeah. And 2 of our producers actually had been members. Both of them had canceled the service for different reasons. One of them said every time she tried to use the card at the movie theater, it wouldn't work. It's not a service where you can call up someone. You have to digitally contact them. So she would end up just paying for the movie anyway, instead of being able to use her pass. Yeah. Are you guys fixing some of these technical issues?
Yeah, believe me, there's nothing I hate worse than hearing those stories. Meanwhile, we're buying 6% of all the movie tickets in the United States. We are half the size of Cinemark without owning real estate, and we've grown 15,000% in 10 months. And so you can imagine the challenges.
And how many cancellations are you guys getting from these kinds of issues?
It is so small. We are still well over 3 million subscribers. So yes, we have people who are canceling. We have an imperfect system, but we're delivering an amazing value to subscribers every day. Yes, some is not perfect.
Why not just go to AMC, go to Cinemark or Cineworld, which is now coming into the U.S.? Yeah. What's the advantage over going to MoviePass? From a customer perspective, you were sort of the only game in town for a while. Right. But now with all of these issues that you're working through, you're now in an environment where you've got 4 or 5 significant competitors.
Yeah, there's really 2 significant differences. One is with MoviePass, you can go to 4 times as many theaters as the AMC program, which is the largest. out there. Second is, our target is the occasional moviegoer who is only going 4 or 5 times a year. That's the group we're trying to focus on. And if there's any mistake we made over the last year, it's trying to serve all movie customers. So we're half the price of AMC. That appeals to the occasional moviegoer who's going from spending $40 a year to spending $120.
What's your confidence that this latest change is a change that is going to set the plan in place, that where you're not going to make further tweaks? Because I know you were trying to do other things in the past as well, raising the price by 50% to $14.95, surge pricing. You ended up abandoning both.
Right.
How are subscribers? How do you assuage subscribers who think it's just a matter of time before you restrict my services even more?
Right. Yeah. Only time will tell. I could tell you all day long that this is the last change. This change is built upon a huge amount of data. There's no other movie theater subscription service with this amount of data. And so we are very confident that this is the last big change.
That was MoviePass CEO Mitch Lowe earlier on What'd You Miss? And finally, move over, CryptoKitties. You've got competition in the ranks of the most popular apps on the blockchain. Instead of playing the game involving breeding cats, the one that, if you'll remember, famously clogged up the Ethereum network last year, it looks like people are turning to gambling instead. Over a recent 24-hour period, the FOMO 3D app attracted more than 5 times the number of users as CryptoKitties. Players spent more than $40 million on the distributed application since the first version was launched in July. And it's not just FOMO 3D. Of the top 10 distributed apps by money received, gambling as a category is only second to exchanges. And that does it for this edition of Bloomberg Technology. That is all for now from San Francisco. I'm Emily Chang. This is Bloomberg.